Very good morning to you all. It is Penuel the Black Pen. Goeiemôre aan julle almal. My naam is Penuel die Swart Pen. Sanibonani nonke emakhaya. Igama lami uPenuel ipeni elimnyama or usiba olumnyama. I studied accounting and economics undergraduate, postgraduate level at Rhodes University in Makhanda and Grahamstown in the Eastern Cape, and obviously did my honors, not obviously, but did my honors in Johannesburg at the University of Johannesburg, Kingsway campus. I worked for a mentor of mine in a company called Africa Empowered, and then from there I spent a couple of years working in banking. Firstly, for the biggest retail bank in South Africa, being Absa Bank, and then secondly, for arguably the biggest bank on the African continent, which is Standard Bank. I worked in personal loans at Absa, and then I worked in vehicle and asset finance at Standard Bank, and I got to learn how the credit landscape looks like in South Africa. And not just that, but I spent a lot of time researching on my own. Spent a lot of time researching how banks work, who are the biggest banks, all the banks in South Africa, how credit bureaus work, how scorecards work, etc. A scorecard is normally the criteria list, checklist that a lot of banks and other financial service providers or credit providers use to determine whether you can get a loan or not. I've been very frustrated since I really learned about banking, since I learned about personal finance. I've been in business myself. I've met a lot of entrepreneurs, millionaires, a couple of billionaires. I've been frustrated listening to a lot of politicians, especially black politicians, a lot of black business people from small to large, a lot of activists, black activists, constantly complaining, not just in South Africa, but almost around the world, complaining about how banks refuse to give black people business loans, but are willing to give black people debt for consumerism. So things like a car, things like a house, things like clothes, things like a cell phone contract, they will give you credit for that, but they will not give you a business loan. And I'm making this video to break that myth and to say that people that are saying that are generally today lying to you. Made an amazing video last year. The title was, "Do Banks Charge Black People Higher Interest?" I made it on Facebook Live before Facebook shadow banned me. My Facebook posts these days don't get as much of a reach as they used to, but I did copy it and I put it on YouTube. So I'm going to drop a link in the description and I'd like you to see it. And the cool thing is that it is split up. You can see that on the timeline, it shows the different points that I cover there. The banks in South Africa, interest rates, scorecards, financial literacy, etc. Please go and check it out. A very important video for you to watch on banking and interest and the like. But I'm making this video to make sure that I'm constantly educating people financially, because financial literacy is one of the biggest game changers between the poor and the rich. Most of the poorest people just don't have financial literacy. Most of the richest people are generally rich because they understand money. It's literally like playing sports. If you understand the rules, if you know the rules of engagement, if you know who the selectors and the coaches and the referees are, and you can build great relationships, it becomes so much easier to win the game. If you do not even know what game you're in, you're already losing. It is not true that black people are given consumer debt, but not given business debt. It is not true. Historically, in this country and elsewhere, black people were kept out of the mainstream economy. That is a fact. There were laws such that black people could not engage in big business, in mainstream business. And unfortunately, because of that time of oppression, there has been a legacy and consequences of that, which we still experience to this day. Black people are not financially literate. Black people do not have assets such as land or property or inheritance from their families. And this disadvantages them in various ways when they are looking to get debt. Why does the bank give you money for a car, which is called vehicle finance? Why does it give you money for a home loan, or a mortgage bond? Why is a bank or why is a financial services provider willing to give you a cell phone contract? Why are they willing to give you a clothing account? Why are they willing to give you a credit card? They are willing to do this because you have a salary generally and you have a pay slip, and you can prove that you can afford to repay this. Understand that banks are not in the business of charity. Banks are not in the business of pushing a black agenda. Banks are in the business of saying, we will rent you money and then we will charge you for the money we are renting to you. And what we charge is called interest. But for us to lend you this money, we need to manage our risk, because we will lend you the money, but what happens if we don't get our money back? Or what happens if we get our money back, but we don't get that profit, which is the interest for the bank? And there are various risk mitigation strategies to this. The most powerful risk mitigation strategy is the payslip and employment verification. That means you come to the bank, they ask to see your payslip to see that you are employed. Someone hires you somewhere and pays you a certain amount. And they can see that amount in real time. They can also see the taxes that you are paid, that you pay, etc. And then employment verification is them contacting your employer to fully confirm that this person works here. How long have they been working here? Do they really earn this amount of money? They do this normally with the human resources department if you have it. Once they can see that, they then do calculations for affordability. Affordability is when they take your income and then they ask you for your expenses. And sometimes if you give expenses, one of the things I learned while I was in banking, they create these buffers because they know that people lie. They know that if you're earning 100,000 Rand a month, the chances of you paying rent of 1,000 Rand are very slim. The chances of you having a car and your car costs you 500 Rand are very slim. So they create these buffers for more realistic amounts so that your affordability at the bottom, what we call disposable income, money you have left over, that is going to now service your new loan, whether it's for a phone, whether it's for clothing, whether it's for a car, whether it's for a house, etc. So they do that affordability calculation. You've got the National Credit Regulator, which is the regulatory body, which represents the National Credit Act, which is the law which determines, decides the pricing, the interest rates, how credit providers should behave legally. The National Credit Regulator checks out if there are banks and other credit providers that are in reckless lending. And they look at things like the affordability calculation as a big one, and of course the risk mitigation and the payslip and employment verification. Of course, they also want your proof of address to make sure that you have a home somewhere. I don't know if they still do much of that anymore. Once they've seen the affordability, then they will give you the money. Now, people are like, okay, so they'll give me money for a car, a house, credit card, but why would they give me for a business? I want to start a business. A business is a risky endeavor. A business is a risky endeavor. The payslip shows that you have been earning income and you can afford. It is proof of past income and past behavior. I can have some comfort knowing that you have been earning a certain amount of money for 3 to 6 months. I can verify it. I can see it. I see it on your bank statement. A business is a forecast of what may come. Now, what may come in business sense, 9 out of 10 times, it's not going to work. Businesses fail. I think 8 out of 10 businesses fail within the first year. And I think the bulk of them fail within the next 5 to 10 years. Very, very few businesses succeed. And even the businesses that succeed, very few of them make a lot of money. So when you go to the bank, you're like, I want a business loan. I want to become an entrepreneur. There is no proof. There is no track record that you can show that I can and I will make money. But there are people that get business loans. So how do they get them? They get business loans because they can prove, just like a payslip, they have a track record, and those track records are called financial statements. Individual, salary, payslip. Company, income, financial statements. And normally you need 2 years audited financial statements. So you go to the bank. At the bank, they ask for 2 years. You show them, these are my 2 years financial statements, my income statement, which is income and expenses, my balance sheet, which is my assets and my liabilities. And then obviously they will look at your bank statements for the business to see if this money actually has been coming in, and if there are expenses, if those expenses have been paid for. And then they need it audited. They need someone who is a registered accountant or auditor with IRBA, with SAICA, etc. to say, we have looked at these financial statements and we have gone to look at the bank statements. We have gone and seen their offices. We have looked at their assets and liabilities, and we can verify that this is actually accurate information, and we are willing to sign off and say this is as far accurate as possible. And then this gets submitted to the bank, and the bank reviews, and again they do the affordability check to see how much disposable income the business has, and then they decide how much credit they can give you. And a business, like an individual, can get cars. There's businesses that get vehicle finance for the business. The business can get credit cards for maybe the directors or other people in the business. The business can get cell phone contracts. The business can buy property. The business can get a bond just like an individual. But when an individual has 3 to 6 months pay slip and bank statements normally, the business needs 2 years at least audited financial statements. When you are submitting your pay slip, it is because it is backed at the back end by a business or a company that normally has audited financials, and the bank has that comfort and then knows that you are hired by that business. That's how it works. And if you want to earn a business loan, that's what you must prove. If you have a salary, you've already proven it. You work for a company that makes money. If you're in a business, you have to prove that you're making that money. Now the question becomes, or before I get to the question, other risk mitigation strategies, just for people to know. If a bank is giving you a loan for a car, that car remains in the bank's possession until you've paid it off. So the bank is the owner of the car, but you get to be the user. That's why banks have a right to repossess when you're not paying back. Same with the house. The bank owns the house until you've finished your 20, 30-year bond and you've paid it off. And you get to be the owner. You get to, or rather get to be the user, and you get to enjoy the rights and the benefits of the asset. But if you default on payment, they have a right as the owner. Because the bank, like I said, is in the business of selling or renting out money. You don't have money for a car, you don't have money for a house. They say, okay, we have money. We'll go buy it on your behalf. But it won't be yours, it will be ours. We will allow you to use it, and then you'll pay us in bits and pieces until you've paid it off. So they have that risk mitigation to say we can repossess these assets and then resell them, which also explains why vehicles and houses generally attract less interest than what we call a credit card, what we call a personal loan. A credit card and a personal loan are not backed by anything except maybe your pay slip. So if you can't pay them back, they can't take something unless they go get a judgment in court. And with that judgment, they can come to your home with the sheriff, and the sheriff will attach your fridge, your couches, your TV, maybe even your car if it's paid up, etc. So that's how the banks work. Now, the question that people should rather be asking is, if the bank will give me money based on a payslip, but I want money for a business, but I do not have a track record, how can I get money from the bank for my business? And this is where smart people, you don't even need to be that smart, use common sense. If I'm looking for 50,000 Rand for my business and I go to the bank, I've got a great business idea, I'm looking for 50,000. The bank will ask, where are your 2 years audited financial statements? I don't have them. Unfortunately, we can't give you the money. I need 50,000. The bank does not necessarily care what that money is for. As long as I can prove that I have a track record of income, as long as I can prove that I have affordability and they have some type of risk mitigation. How do I get 50,000 Rand from the bank for my business? I use other tools. One of the tools is, let me go and get a job and get a pay slip. Once I have the pay slip, I go to the bank, I ask for a 50,000 Rand personal loan. The bank does not necessarily care what I'm doing with that money. I take that money, I start my business. If my business fails, the bank has got the comfort that this guy has got a salary somewhere. They will be able to pay back this loan. Similar thing if you want to invest in something like Uber. Go to the bank, I want to invest in Uber. The bank won't give you money for Uber. But if you have a pay slip, the bank will give you vehicle financing. What you then do with that car for your business is up to you. Property. I've got this great idea to have rental property. The bank is not going to give you money for that, but they will give you money with your pay slip. And with your pay slip, you can then go and get a bond, and then you can maybe run Airbnb or whatever the case may be. On the flip side, there are people that have business plans at the bank. And they need to, if you don't have 2 years financial statements, they want to see the forecast. How much are you going to make? And can you reduce the risk for us? So people will get money in things like, I've just signed with a mine. I will be transporting coal to and fro. I need 3 million Rand or 5 million Rand to buy a truck or 2 trucks or 3 trucks. And the bank says, do you have a pay slip? Unfortunately, I don't. The bank says, do you have 2 years audited financial statements? Unfortunately, I don't. We cannot give you money. And I say, what I do have from this mine, which is a business registered company, the mine can show that they've been making income. They've got audited financials. This mine is giving me a contract. It is signed to say that I will be getting paid maybe for a 3 to 5 year period to transport coal on condition that I have a truck or trucks. This is a contract. The bank looks at this and they say, we can see this contract. We see that you're going to be making 500,000 a month, 1 million rand a month. It looks legit. We are willing to verify that mine. We are willing to verify this contract. And because we have comfort that there's some type of risk mitigation, we will give you the money to go and buy the trucks. Even worse, these are trucks. So we will actually own the trucks on behalf of the business. And then if you cannot pay us back, we will repossess these trucks again. But you have shown us some level of risk mitigation. I think this is fundamentally important. There are other people that use what we call security or collateral. If you've got cash, if you've got a paid up house, you go to a bank and you say, look, I've got a 1 million rand house. I would like to loan out 300,000 rand. The bank can say, are you willing to sign surety with your house? What that means is if you cannot pay us back this 300,000, we will come and repossess your house and sell it and get our money back. But normally these days, surety is not enough. They want to know that you have an asset, which helps. And especially if you want more than the surety you have. I have a 1 million rand house. I want 5 million rand as a loan. They'll say, we'll take the 1 million rand. It's a 20% collateral security. But we still want to see affordability. We still want to see where you're going to be making the money, where the affordability is going to come from. It cannot just be enough that you have an asset. But if you have an asset that's paid up, you're willing to sign surety as collateral, and you want less than the value of the asset, the bank will consider that. Again, a bank is not a charity. A bank is in the business of renting out money for profit. I hope this gives you a bit more clarity, and hopefully politicians, pro-black activists, and all these people stop lying to you. Historically, black people have been kept out of the money game. Historically, black people don't own land, which works great as collateral. Historically, black people don't own properties. They haven't been in business. They don't even understand the financial literacy of drafting income statements, balance sheets, so that they can draw financial statements. They don't understand that there are auditors out there. Some of them cannot afford auditors to sign off on their financial statements. A lot of them don't even bank their income so that at least there's a track record of money coming in and going out. A lot of them don't know that you must swipe, for purchases so that it shows there. A lot of them don't know that when you're sending money somewhere, make sure that the reference shows up, whether it's a salary, whether it's a certain expense, whether it's a certain invoice. Bookkeeping, so that it's easy to audit. And then once you have audited financials and you have income, net income and disposable income, it becomes so much easier for the bank to open up credit for you. And if you've got a business bank account and they can see all the activity in your bank statement, they will approach you to get vehicle financing for your business. They will approach you to get a credit card for your business. They will approach you to maybe buy property for your business. They will sit down with you, and even if you're not ready, they will tell you, look, go and get audited financials, go and do this, and we will help you. Because their business is in renting out money. And if they can see that you can afford debt, they want you. And if they know that you have assets and you're making money, they want you. It is not about the color of your skin. If you look at the credit bureaus, South Africa, we have Experian, we have TransUnion. There is a line for race, there is a line for gender. The National Credit Act, the national credit regulators do not allow constitutionally for any bank, for any credit provider to discriminate based on race, based on gender. They can collect that information for statistical purposes so that if you are running data analytics for the bank, for the credit provider that you work for, you can see how many black people took out debt. You can see how many women took out debt. And then if you want to do the analytics, you can see that, okay, black people maybe pay worse or pay better. You can see that women pay worse or better. But with that information, you are not allowed legally to discriminate in your credit scorecard. You are not allowed to discriminate based on race or gender. And if anyone ever finds that out, they can take you to the credit ombudsman under the National Credit Regulator. You will be in violation of the Constitution for prejudice and discrimination in this country. I need you guys to understand this. Like I said, I worked in banking. I've seen what happens. The biggest issue that most black people have is lack of financial literacy. Financial literacy is understanding money. It's understanding the money game. It's understanding the money system. How do you do that? You do that by reading books. Robert Kiyosaki, Rich Dad, Poor Dad. George S. Clason, The Richest Man in Babylon. Neil Ferguson, The Ascent of Money. Think and Grow Rich, Napoleon Hill. Jason Lee, Investing in Property in South Africa. You learn the money game. You go and you read the newspapers, Business Times, whatever business section of the newspapers that you read. You go and you watch Bloomberg. You go and you watch CNBC. You read magazines such as Forbes, etc. And then you engage business people. You go and you look through your bank statement. If you can, make friends with bankers. Make friends with bankers, understand how this stuff works, and learn about it. I believe that part of the work I need to do, as long as we have a money game and a money system, I need to host seminars and sessions where I'm educating people, where people are asking me basic questions and I can answer them. Is the system rigged? Definitely. It's rigged mostly because of ignorance, number one. And of course, the schooling system is designed so that you don't learn these things at school. It's rigged because there are certain people that bend and break laws, including the auditors that are meant to sign off. Some of them are corrupt. We've heard of KPMG, we've heard of Deloitte, we've heard of a chartered accountant under Syker, Marcus Jooste, under Steinhoff, who was corrupt and went and committed fraud and lost a lot of money for investors. The game is rigged. Is there racism in the banks? There might be. There might be racism. You might be working with someone in the bank who, because they see that you're black, will not give you the information that you're looking for. You might get to a consultant in the bank who is Indian and you happen to be colored, and maybe that Indian person doesn't like colored people. And when you're asking for information, they won't give it to you. But if they see a fellow Indian person walking to the bank, they might say, hey, you know what, my brother, let me just tell you, if you can just sort out these two things, I can be able to help you. Once you understand inside the bank that there are things like overrides, this also, again, this falls under ignorance. You can learn how to win the system. You go to a bank, you apply for something, you get declined, rejected. But because you understand the system, you're like, no, Penwell taught me that there's something like an override. I go to the consultants, I say, please may you escalate this matter to head office. I would like to speak directly with the decision maker for this because I feel they are wrong. But sir, the system said, I understand, but I would like it to be escalated to a higher authority. When I was at ABSA, when I was at Standard Bank, we would get a lot of these queries from consumers, from consultants saying, I'm sitting here with a client. They were rejected. They want this amount. They wanted this amount. They were rejected. The system only allowed them this amount, but they claim that they are good for it. You get to submit the bank statements. You get to submit the payslip. You get to look at their bank statement activity. And you get to override and say, actually give it to them. Some people complain about the interest rates. And there's something called interest rate concessions where they give you a discount. If you are good credit, if you are paying well, if you've got good collateral, you can pay less interest. Again, ignorance and financial literacy. And unfortunately for the majority of black people and colored people in this country, there is no financial literacy, and your politicians are not financially literate. And sadly, a lot of your bankers, a lot of your accountants, a lot of your insurance guys, educated, are not schooled on personal finance, are not schooled on how these things work. Even they themselves, you meet an engineer, you meet a doctor, even they themselves are struggling with their own money issues because they are not financially literate. And sadly, most financial advisors today are only there to sell insurance products, only there to sell unit trusts and investment products. They are not there to educate you on how money works, what money is, how to understand the system, how to exploit the system legally, and how to make sure that you bend the system according to your will. Even when you cannot pay off certain debt, the system allows you to wipe off that debt without paying it off. But you need to understand how these things work. A lot of tax advisors, unfortunately, are not deeply schooled on the tax so that they can help you minimize your tax liabilities. They're just there to submit your taxes. If there's a refund, hooray. If there isn't, well. But they're not there to fundamentally explain, you should live in this area. Start your businesses in this economic zone because there are deductions. Move your money like this. Make sure that when you're paying this person, pay them from this account. Set up a non-profit organization. Set up a trust. These are how these things work. And you educate people to be financially literate. And I do believe that maybe I need to spend some time hosting seminars and sessions for groups, because individual is a bit time consuming and energy draining, and it will probably be very expensive for one person. But for a group of 10, 20, 50, 100 people, it might be better for me to explain these things, educate, and then allow people to ask me questions. And where I do not have the answers, I'll note down the questions, I'll go and do the research, and I'll ensure that I get back to people and I answer them. As I said, I studied accounting. I'm an accounting and economics major. I've worked for two of the biggest banks in this country, and I've done extensive research, reading. I've met a lot of business people. I understand the money game. Am I brilliant in the money game? No, unfortunately not. I struggle. But why, Pen? You know all these things. Unfortunately, having knowledge of a certain industry does not necessarily mean you will excel. Robert Marawa is normally my prime example. Robert Marawa is an amazing soccer football analyst in South Africa. He understands football inside out, locally, on the continent globally. He can tell you which players are amazing, which players are good, when players are injured. He can tell you about the weather conditions. He can tell you about the stats and the data. And he can tell you this child, this boy is one to look out for. Then you ask him, but Robert Marawa, why did you never play for Bafana Bafana? Why did you never travel to Europe to go and play in UEFA? It's like, I know the industry very well. It doesn't mean I'm a good player. I'm a good analyst. I'm similar. I'm a very good analyst of the money game. And I like to think I can educate and inspire others to be good. And I can coach other people. But in terms of playing it, unfortunately, I am not that great. I'm constantly trying to improve. But unfortunately, I have my shortfalls. You want to be an amazing sprinter, but you're fat. You want to be amazing at making money, but there are certain limitations in your life, certain things you are not willing to do that keep you from excelling in the money game. However, I advise a lot of millionaires, a few billionaires. I watch how they move and I take the learnings from them because they are good and I pass them on to the next person. So when I meet someone who's like, I want to be a millionaire. Pen, are you a millionaire? No. But I spend time with millionaires and I can tell you what I've seen from them. And I can teach you some of the things that they have taught me. I may not be using that stuff, but I can pass it on to you because you're interested. I can sit with Springboks as an example and see their gym, how they gym every day. Not willing to gym like that. I can see the supplements they ingest. I'm not willing to take them. I can see how much they travel around the world to play different teams. I'm not willing to do that. I look at the interviews. I look at the charity work. I look at their lifestyle. I look at how tall they are. I'm not that tall. I look at how big and muscular they are. I'm not that big and muscular. I look at Cheston Colby stepping the fuck out of everyone. I am not that great. But I can learn from them. And for the next boy who's trying to become a Springbok, I can explain, this is what Siya Kolisi does on his off days. This is what Cheston Colby does to improve his speed. This is what Peter Steph Dutoy did when he was in high school to ensure that he became stronger and more effective around the pitch. That's why there's a space for people like me, an educator, someone who empowers people, someone who analyzes people and who goes out there and tries to take the information from the world, like Napoleon Hill from Think and Grow Rich, and they try and share it with the people that need it so that they can thrive. Again, a very powerful video, if I may say so myself, that I did last year. Please check it in the description below about banks, financial literacy, scorecards, etc., etc. It's very educational, if I may say so myself. I'm looking forward to some of your comments, some of your thoughts. If you disagree with some of the things I say, if you've had good experiences with the banks, if you've had bad experiences with the banks, I'm looking forward to some of your comments, some of your suggestions. And hopefully some of you, when I start hosting my seminars and sessions and workshops, will come and join me and we will sit and get educated together. I will teach you as much as I can, and hopefully you guys will teach me a little bit, and I'll become a better teacher and help as many people as possible to become financially literate so that they can play effectively in the money game and start winning. Win in South Africa, and then very soon start learning how to win in the money game globally. Pen you well the black pen, pen you well the swart pen, pen you well ipene elimnyama or usiba olumnyama. Have a great and blessed day, and I'm looking forward to more of you guys becoming millionaires and billionaires and making an impact and a change in the world. Cheers.